up, everyone? This is Elijah here, and welcome to another video produced by the App Lifestyle, the place where the world is literally in the palm of your hands. And in this video, I'm actually going to be breaking down the system that I'm going to personally be using to take my app earnings and invest in the stock market. Now, the key to doing this is to make this as autonomous as possible. That way, you don't have to be doing a lot of thinking. And I also want to make clear that I'm not a financial advisor. I'm just someone on the internet that's sharing his experience on what I'm doing with my app earnings and investing in the stock market. With that being said, I'll just be sharing my personal recommendations because people have asked for this topic. So with that disclaimer out of the way, we're going ahead and move on to exactly how do you set this up. So over the course of this video, we're going to cover three things. First thing is how to invest consistently. Second thing is what am I personally investing in and what I recommend. And the third thing is what will your money look like over a 30-year span if you keep these habits up. So with that being said, let's go ahead and hop into the video. So right off the bat, I have a separate bank account that my app earnings go to. And that's why I recommend that everyone sets up. The reason I'm setting it up that way is because all the money that's going to be invested in the stock market can be pulled from that one bank account. Now, if you're not going to set that up, I recommend that you arrange for a percentage of your earnings to go to a said bank account, whatever you want that to be, and then you link the app we're going to be using, which is M1 Finance. You link that one to your that bank. That way, money is just going. I recommend you set this up reoccurring. So money is just going to that account, and then money is going and investing in the stock market without much thought on your behalf. All you got to do is just check on it like once a week. Now, let's actually go into what that looks like. So I'm going to share my screen. Give me 1 second, fellas. Share entire screen. Here we go. And I'm going to type in Chase because that's the bank that I've linked to my M1 Finance account and also my gig apps. I'll log in. Okay, so as we can see, I'm actually in a very unique situation, which is great for demonstration purposes. So this bank account only has $110 in there because I actually DoorDash and Uber Eats a little last week. So that's the payment from those activities. Now, why this matters, we're going to go into in a sec. But the way this system is going to work is that each time your account balance, which is right here, obviously it's going to look different based on who you're banking with, but your account balance, once it reaches a certain amount, you want to increase the amount of money that you're investing in the stock market. So however much you're investing on a weekly basis, multiply that times 4. The reason we do that is because you're going to be investing on a weekly basis, right? So you want the amount that you're investing per week to be at least 4 times less than however much your balance is, just so you can give yourself some breathing room in case you needed to change something. It's not like, hey, if you forgot to do something or if something changes, like, oh, something happens that week. No, there's money in there so that everything can go according to plan. It's kind of like I don't want to say a safety net, but just like a money cushion, if you will. Now that we covered that concept, we're going to play with some numbers and take a look at the compound interest calculator. I'm going to type in compound interest calculator, and this is what a lot of people don't do. And I specifically haven't seen anyone who's talking about the gig economy do this. But when you keep investing over a certain amount of time, assuming that you're having your dividends reinvested, you're going to be able to benefit from compound interest because that money is just going to keep growing and growing and growing. And the statistic that everyone likes to use is if you invest in a certain portfolio, specifically the 4-fund portfolio. I've talked about this in another video, which is linked in the description, but the short version is you're investing in the total stock market, the international stock market, the total bond market, and the S&P 500. That's known as a 4-fund portfolio that just kind of covers like everything. So you're kind of diversified, and when the stock market and bond market rises, then you get the benefits from that. People tend to use 8% because that's the average over a 10-year span. So like it might be 6 or 5% this year and like 10 or 12% next year, but it tends to average out to 8%. So we're going to use that. as our tool. So we're going to say the initial investment is 0, because I'm going to go off the assumption that you haven't invested anything yet since we're setting this up. As far as monthly contribution, to start out with, the minimum amount that a person can start out with based on the system is $100. And that's the times 4 whatever you're doing weekly. So let's say if you can only invest $25 per week, that's $100 per month. The year time span, we're going to do a 30-year time span because that's the magic number people like to throw out there for retirement. The interest rate, we're going to put that at 8%. And the interest rate variance range, now that's not really applicable here. We're going to compound it on an annual basis. Click calculate. So in 30 years, assuming you have dividends reinvested and you don't touch the money in terms of pulling money out, you have $100,000. You have $135,939.85. Now let's play around with these numbers some more. Let's say you start to increase the amount of money you're investing from the gig apps, and this goes up to 200. When I calculate, now the amount is $271,879.71. Quite an increase. Now we're going to increase this. Oh, and just so you know, that's $50 per week. So now we're going to increase this to 400, which would be $100 per week. Let's calculate. The amount is $543,759.41. Now that's a big increase, but let's say if we play around with it some more and turn this into 800, that's $200 per week. Click calculate. The total amount is now over $1 million. A nice little piece of pocket change, if I do say so myself. So we're going to switch over to this investor guide, which I've made. And I'm going to leave a link to this in the description. So if at any point you just kind of want a reference, it's going to be right here. And what it has is each time your balance exceeds or decreases a certain amount, it lets you know exactly how you should be changing your recurring transfer on M1 Finance. For instance, if your balance is between $100 and $200, then you set a recurring deposit of $25. And then it shows the 30-year forecast. And if you have under $100 in there, I just wouldn't invest anything because that's too little to really make like a difference. If you have between 200 and 400, a reoccurring deposit is 50. If you have between 200 and 400, the recurring investment is 100. And between 400 and 800, the recurring investment is 200. Now that we've covered that, we're actually going to go into the portfolios, and I have the resources of the videos that I've talked about linked here too. The 4Fund portfolio, we'll start with that. That's the one I recommend for most people. I'm going to click on that. And M1 Finance actually lets you know exactly like what the return has been over a time span if you want. So we see over the past year, it's returned about 12%. So this is one of those years where it's actually higher than 8%. Well, you can look at the 3-year span. I'll let the numbers speak for themselves. The 5-year span. Okay. Now, with that being said, we're going to go into, now these are my portfolios, but I don't necessarily recommend this for you if you have like a low risk tolerance. Like I'm just sharing this to give full disclosure. The 4Fund portfolio is actually something I don't do. I have more risk tolerance and I know how to analyze stocks. So I have different portfolios. So this is more for disclosure purposes, but I do have it here if you have any interest on it. So I have a portfolio that's split between these two portfolios. The first one I call Financial Freedom when I first got into investing. And I just decided to stick with the name. And that's 80% of my money. That's 80% of my overall portfolio. This is more safe and secure stuff. Let's just go ahead and click on it. So when we go to the holdings, you see the total stock market ETF. You see the S&P 500. You see the DME dividend fund. You see AT&T, Verizon. I'm not going to go through all these because you can look at them. But it's a combination of index funds, ETFs, telecommunication stocks, consumer staple stocks, and banks, as well as MLP ETF that we see right here. Now that is investor jargon, and I'm not going to go into like each individual stock and why I chose that, because I don't think that's what y'all signed up for. That's more of a financial anatomy video. So if y'all want to see that, just comment in the comment section, and I will make a video on financial anatomy and link it in this doc as far as exactly why I chose these individual stocks and funds based on my own analysis. But this is full disclosure that this is the portfolio that I'm working with. And oh yeah, you can also look at its performance over the past year. So as you can see, it's done fairly well over the past 3 years, past 5 years, etc. And 20% of my portfolio is actually the creator economy. Now, the creator economy is basically what I'm doing now. Y'all know I am a creator, and there are stocks that with this software and stuff that I use, and I want to support that software as well as just the overall like concept of the creator economy, because I think it's actually undervalued. I think a lot of people are actually going to hop into being freelancers, being entrepreneurs, being content creators. So this is what is known as speculation. But like I said, I have a higher risk tolerance than most people, so I'm willing to speculate a little. But 80% of my stuff is still on the safe and secure side, which is the first portfolio that you saw. So what's in here, we got Visa, which is instrumental in transactions, Verizon, Sony, PayPal, Zoom, Twitter, AT&T, Amazon. There's a lot of stocks that's critical to the creator economy right now, and I don't see most of them haven't really taken off that much. But this is more of a long-term speculation play, so that's what I'm looking for there. But let's say worst case scenario, nothing happens. Well, it's just 20% of my portfolio. So now that that has been shared, I'm just going to briefly cover the resources videos. So the methodology or mindset around why the fund portfolio works and how to just kind of set that up, I've actually covered in this video how rideshare and delivery drivers can get ahead financially. So you can just check that video out. It's going to be linked in this doc. And specifically with working with M1 Finance, how you can set up a recurring transfer and also how to change it whenever like your balance exceeds a certain amount. That's covered in this video, so you can check that out. Now, I will say that right off the bat, if you want to use M1 Finance, you will need $100 to deposit and get started. So just so you know, you will need that. I don't think they've changed it as far as I know, but if they do change it, they'll probably get rid of that or make it less. Just assume that you'll need 100, and if you find out that they don't need it anymore, that's just a bonus. But let me stop sharing my screen, and here we go. All right, so that is the system that I'm working with and that I've set up to make it kind of easy for y'all to implement if y'all have an interest in doing so. Now I showed like the portfolios just on the shared side, but I'm going to be doing weekly updates to where you'll see how much I've invested or how much I've driven for Uber Eats and DoorDash in between my Airbnb bookings, like I mentioned before. And you're going to get to see like the portfolio, like where it increased, where it decreased, just so you can have full disclosure. And like I said, I'm not using the fund portfolio because I have higher risk. But the more important concept here is just to invest consistently and to really recognize exactly how your investor efforts are going to pay off in the long term. Because a lot of people don't look at that compounded interest. And this system is showing you exactly what it's going to be as long as you just stay consistent with this. If you have any questions or comments, feel free to leave them below. Like I said, that doc I created will be linked in the description and also in the pinned comment. I'll catch y'all in the next video. Be safe, be profitable.